Well, Alex Kearns was just one of 10 million Robinhood users, and that number, of course, has grown in this pandemic and continues to grow as retail trading picks up. At the center of the day trading boom, a site called Robintrack. It is unaffiliated with Robinhood, but it does use the information from the trading platform to track the latest trends among its users. It's become a key resource to major money managers and traders alike. Joining us now is Primozic, the founder of Robintrack. Casey, great to have you with us.
Thanks for having me.
You were a student in college, and this was your side project. I'm wondering how you got this idea and why you thought this could be useful.
So I'm a Robinhood user myself. I'm a fan of their platform, a fan of their philosophy, and I noticed that they were publishing the popularity numbers on their website. But I noticed that you didn't really get any context. All you saw was the current number. And I'd built a couple other tracking websites in the past. It's kind of just something I'm interested in, and I saw the opportunity to do it. I was just curious for the most part, and yeah, Robintrack was the result.
I mean, I for one, check Robintrack almost every day to get a handle on what's going on in the retail trader brain, Casey. I'm wondering how you've seen traffic pick up throughout this pandemic.
So yeah, there's been a very dramatic increase in traffic, multiple hundreds of percents of increase. There's been a lot of people on both institutional and retail side who are trying to get a better idea of what retail traders are up to. So yeah, there's definitely been a dramatic increase as a result of the pandemic and the associated increase in retail trading activity.
Hey, Casey, it's Tim Seymour. Thank you for joining us. I'm curious in terms of some of the trends in terms of time of day, in terms of frequency, in other words, number of times per day, and how some of this has changed since the crisis. Tell us what you see.
So Robintrack collects the popularity of every stock on the brokerage every hour, and the popularity is the number of unique accounts that hold any amount of shares. I've seen like a lot of the popularity changes happen rather dramatically, depending on like earnings events or changes in price. Is that what you wanted to know, or?
Yeah, it would be interesting to know what time of day are retail investors, are they jumping in right at the open? Obviously, again, understanding when you see the most momentum in the market certain times is very important to trading and how you want to be tactical on your own. Yeah,
so I've seen there's a lot of different times when it comes in. There's often a lot of activity right at the open, and especially the hour before close, sort of matching movements in price. That being said, like a lot of the time, the things that drive changes are news events or other social media trends. So yeah, it can vary a lot depending on the stock and the reason people are trading it.
Casey, you had mentioned that a lot of institutions and hedge funds have expressed interest in using this data. Do you get a sense of how exactly they are using it? And are you worried that they perhaps are using it at the expense of the retail trader, that perhaps they are sort of riding momentum and selling and letting the retail trader hang on?
So here's the thing. A lot of these big institutions, they get this data through other means. Like they get order flow directly from the brokerages. They have a lot of ways to get similar kinds of data, almost sometimes even more granular or accurate. But the thing about Robinhood's publishing this popularity data for everyone publicly is that it gives a broader access to it. So there's definitely a lot of people who have been collecting Robintrack data. I've seen them with automated scrapers or just using the data download I provide on the website. But at the same time, yeah, a lot of these different firms and brokerages or institutions would have this data some other way. So the fact that Robinhood or Robintrack provides it is almost a net positive for the retail traders and non-institutional investors who are trying to get a better picture of the market.
So you think that retail traders can use the Robintrack data in order to trade better for themselves, just knowing where the momentum is? Or do you feel in any way concerned about some of the new, it sounds like you're kind of an experienced trader yourself, having been a follower of the markets and having the sense to know that tracking this data and just sort of putting this data together is important, that there are a lot of newer traders in the market now, and they could just be trading these penny stocks. I mean, a lot of the biggest changes that you track happen in five-letter stocks.
That's true. So one thing to keep in mind is Robintrack is just a tool, right? It's data. You can use data for constructive purposes. You can use it to, push a bias of your own. In my opinion, having more data is almost always a good thing. It's up to, it's just another tool in the arsenal of traders trying to get a better handle on things, and it's up to them how they use it. In my opinion, I think it's definitely a valuable thing to see how the other retail traders are acting. So if you're part of this big FOMO bubble or whether or not the company you're investing in is legitimate, and the price changes are reflecting actual changes in fundamentals.
Last question to you, Casey, before we let you go. Are you making money off of this?
I'm making money off advertising on the site, but I will never and have never charged money for access to the data. I'm a big fan of Robinhood providing it for free, and to reflect that, I provide all the data I collect freely and will continue to do so into the future.
All right, Casey, great to speak with you. Thank you.
Thanks for having me.
Casey Primozic, the creator of Robintrack. We've talked about the rise of the retail trader and the importance of the retail trader, and I think that there are a lot of different views on the impact of the retail trader on the markets. Guy, I'm curious what you think. We had Jim Bianco on earlier this week saying that he absolutely believed that the retail trader was a force in the market's momentum higher.
Yeah, I believe that as well. And, you know, weeks ago we talked about the fact that don't underestimate the notion that with sports not around, people are going from their sports gambling to the market. And I think, listen, like him, hate him, agnostic about him, Dave Portnoy introduced a lot of people to the market, for better or for worse. And I'm not going to take a stand either way, but people are in the market. But the story that Kate spoke about is a tragedy. And think about the numbers she mentioned. His account, and I can't speak exactly, but you're talking about $750,000 on one side, potentially the offset in an options trade on the other side. This is a young person. How did that happen in the first place, if you think about it? And it's something that Tim mentioned the other day. It's one thing to have $5,000 in your account, and if you lose it, you lose it. You'll live to fight another day. It's another thing to have $5,000 in your account and have the ability to margin it up. That could be catastrophic. And I think that's what we're talking about here. And people should really understand the difference between the two.